Hi, my name's Ben Stoikovich. I'm the chairman of Sovereign Metals, and I'm here today to give you an update on Sovereign's graphite byproduct strategy. The Kasiya Project is located in Malawi, East Africa. It was discovered by Sovereign in 2018, and it is a massive deposit. It's world-class, covering over 200 square kilometres. It's the largest rutile deposit ever discovered, and globally it ranks as the second largest natural graphite deposit. The way we think about Kasiya is that it is a primary rutile deposit, and the graphite will be produced as a byproduct. In fact, it's the only known deposit where graphite is a byproduct. And Rio Tinto is a 19.9% shareholder in Sovereign and a strategic partner in the Kasiya Project. The Kasiya deposit occurs as blanket-style mineralisation hosted in a soft, friable saprolite. In other words, the ore body is contained in totally weathered material. And in terms of graphite, this leads to significant advantages. The ore is free dig and has very low levels of sulfur. Why is this important? Because most other graphite projects in the world are hosted in transitional or fresh rock, where the ore increases in hardness with depth and sulfur levels become higher. It's important to note that high sulfur levels negatively impact graphite suitability for the battery anode market. Simple processing at Kasiya drives commercial advantages. Here we can see a typical fresh rock graphite mine that has hard ore and the many energy-intensive steps to mine and process the material, such as drill, blast, crush, and grind. Whereas Kasiya, with a soft, free dig ore body, is much simpler. We only have a basic step of scrubbing compared to fresh rock projects. And this means lower costs, but it also preserves flake size and gives us a graphite product with a higher proportion of much higher value medium, large, and jumbo size flakes. Here we compare the flake sizes we can produce at Kasiya with other graphite mines that are in production around the world. Take, for example, the Balima mine in Mozambique, owned by the largest listed global graphite producer. They mine in transition and fresh rock, and they end up with nearly 90% of their graphite product in the low value, small flake size category that sells last quarter at a price of around $560 per tonne. Whereas at Kasiya, with a weathered ore body, only 30% of our product will end up in the small flake size category, with almost 70% in the medium, large, and jumbo flake sizes that sell for up to $1,200 a tonne. We've also done all the test work at Kasiya to show that our graphite can be used for all major end-use markets. In fact, it's suitable for 94% of graphite end users. We've proven our graphite can be used for battery anode manufacture, but more importantly, we've confirmed its use in the far higher value refractories and expandables market. Rio Tinto became a strategic investor in Sovereign in mid-2023. To date, Rio have invested $60 million and are a 19.9% shareholder. The Kasiya Project is now overseen by a joint Sovereign Rio technical committee and a small army of Rio Tinto subject matter experts are closely involved in the project. Last year, we completed a pilot mining program, and those results were used to produce an optimised pre-feasibility study, which was published last month. The joint Sovereign Rio team is now cracking on with a definitive feasibility study, which we aim to complete during Q4 this year. The pilot phase has provided substantial empirical data that has informed our forward project design. It makes our optimized pre-feasibility numbers much more accurate. We extracted 170,000 cubic meters of material at a 10-hectare site and completed the whole program in 6 months. We have now rehabilitated the land and returned it to farmers. They didn't even miss a planting season. And the results of our optimized pre-feasibility study were exceptional. It shows a pre-tax NPV of over $2.3 billion US, with an annual average EBITDA of over $400 million US. We would be the world's largest rutile producer, and we'd have a 64% operating margin. But the really important point is if you look at the bottom of this table, you can see that our incremental cost to produce a tonne of graphite as a byproduct from the Kasiya Project will only be $241 US per tonne. So where do we plot on the standard industry graphite cost curve? We're at the very bottom, where other projects can't make money in the current market. We'd be selling graphite at a 50% operating margin, even if we only sold into the lower value battery graphite market. For this reason, some fund managers have called Kasiya, in terms of the graphite industry, the category killer. But before we get too excited, let's look at the full story. The graphite industry has challenging industry dynamics. Graphite isn't scarce. In 2023, natural graphite demand was 1.6 million tonnes, but global known resources are over 800 million tonnes. So there's enough resource known in the world for 500 years of supply. The markets are opaque. There's no terminal market. There's widely varying specifications, and it can be a challenge for some companies to secure mine development finance. And importantly, China dominates low-cost production. China produces around 1.2 million tonnes per annum of natural graphite, i.e. about 75% of global supply, at an average production cost of $257 a tonne. The rest of the world simply cannot compete. Here is the real global graphite cost curve, because it includes China, which up until now, most investors have never seen. First of all, it's no wonder that many non-Chinese graphite projects are struggling. They are simply too high on the real cost curve. Notice the current global demand for natural graphite is 1.6 million tonnes per annum, shown by the grey shading. Well, with China already producing 1.2 million tonnes per year and Kasiya potentially contributing a further 250,000 tonnes, there is unlikely to be demand for many of these higher cost projects, unless, of course, the often predicted dramatic increase in global graphite demand materialises. And this is why many of these higher cost projects are aiming to move downstream from mining into battery anode manufacturing in an attempt to capture some form of profitability. But what's important for Sovereign is that Kasiya is right at the bottom end of the real cost curve, and we'll always be able to sell graphite into the market at healthy margins. So there you have it. Kasiya is a world-class mining project. Where other companies need to go downstream to capture margin and make a return on investment, we don't need to, and we have no intention to. We are a mining company, not a chemistry company. Kasiya will potentially compete with low-cost Chinese production, even in today's market. Here on the right, we show graphite companies with downstream strategies. Some of these anode plants will undoubtedly be built, and if they are, Sovereign will be ready to provide them with high-quality, high-margin graphite. So the bottom line for me is that Kasiya is the best graphite project in the world because it's actually a high-value rutile titanium project, where the graphite comes out as a byproduct at the very, very low cost of $241 per tonne. We have a blue chip major, Rio Tinto, as a strategic investment partner, and Kasiya can produce high quality, high value graphite due to the weather geology. Kasiya graphite has very low sulfur levels, and almost 80% of the graphite product will be in the higher value medium, large and jumbo flake sizes. Test work to date demonstrates that Kasiya graphite is suitable for all major end uses, and the Sovereign team, along with our partner Rio Tinto, is rapidly progressing with the Kasiya definitive feasibility study, which we aim to publish in the fourth quarter of this year. Thank you.